In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization. We have the information on the left-hand side. We're entering that into the blue area on the right-hand side. In prior presentations, we entered the financial transactions for a time period. We made adjustments for the expense accounts by category. Then we did the closing entry process. Then we started the financial statements including the statement of financial position, the statement of activities, and now we will be considering the statement of cash flows. So statement of cash flows, much the same as a for-profit type of organization. We are using, in essence, an accrual basis here. Therefore, we're going to have the statement of cash flows. Now, you'll recall the statement of cash flows, a little bit more complex to put together than the other statements we typically have to consider. Beginning balances and some other types of activities. I'm not going to go into a lot of detail to put together, or the best format to put together a statement of cash flows. If you want to look into that, got a whole course on basically the best way to put together a statement of cash flows. It's not often done well or taught well, or you don't often learn how to put one together as easily as could be done. But here we just want to make sure that we note that the statement of cash flows is going to be one of the core statements that are going to be put together with the nonprofit organization as well. And then we could also have the same options with the direct method or the indirect method. Oftentimes when we have the direct method, we typically oftentimes include an indirect kind of reconciliation of the operating section as well. Okay, so keeping that in mind, we're going to do the whole thing. We're going to go through the direct method, and then we'll do kind of like the indirect method as well, that reconciliation type process. So we'll recall that the statement of cash flows has three parts to it. We've got the operating activities, we've got the investing activities, and then we have the financing activities. The operating activities are going to be similar to kind of like the income statement. You can think of it as similar to taking the income statement on an accrual basis, making it kind of a cash basis type format. We're going to start there. We're going to start with the operating activities. We're going to start with the operating activities using a direct method first. So the direct method, you can kind of think of it as we're going straight down let's scroll back up, the income statement accounts, these type of accounts up top, and we're going to basically convert them from an accrual basis to basically a cash basis. That's how you can kind of think of it, instead of taking the bottom line number here and then backing out and reconciling from an accrual basis to a cash basis number. So we're going to go basically top to bottom. We're going to say cash received from contributions. That's kind of like our revenue account that we would have on a cash type basis. Now, if we go through the transactions, we could scroll up top and I could say, here is our contribute. Let's go all the way to the first trial balance up top. Here's going to be our contributions. I'm going to unhide the cells and consider what's included in these cells. So I'm going to scroll back over and I'm going to unhide. I'm going to unhide the cells between D and J by selecting those cells, right click and unhide. And then we have to consider what is going to be included in here that is cash related. So I'm going to use this item to say this is what's included there, this is what's included there, and that these little functions are included in, if we go to the data, formulas, and then formula auditing, here are those items if you want to use them. So if we go to the left and we consider which of these are for cash, notice that the first one is not a cash related item. It was for rent expenses. That's how we got the revenue here. And this item is for cash. So these two, it's going to be that 348.7. That's the one we're looking for. So these items aren't the cash items. So what we're looking for is really just this number. That's going to be the cash related item on a cash basis. So I'm going to scroll all the way back down and we'll pick up that number. So I'm going to say this is going to be equal to, I'm going to scroll all the way back over and pick up this cash number. So there we have that. Next, we're going to have cash paid to employees. Now, I'm going to pick this up from the trial balance up top. And the reason I want to do this is because this is going to break out the items by expense item here. So we have the expense items that we could use to break out the cash flow statement. So of course, when we think about the salaries and expenses, we're considering salaries and expenses. And the other side that we are considering, I'll make that green, is going to be the payable that we had. So those are the two accounts that we need to net out. So what I usually do is I net them out. So I'm going to scroll back down. I know this is kind of a long scroll to get down up and back, but I'm in cell U69 equals. I'm going to scroll up to that first trial balance, the one that has the expenses in it, and we're going to pick up this number. That's on an accrual basis plus the salaries payable, the 16.8, and enter. And I need this to be a negative, however, so that net needs to be negative. So what I'm going to do is double click on it, put a negative, and then brackets around it to flip the sign. So negative, and then we'll bracket it to flip the sign, and there we have it. Next, we have the cash to suppliers. So I'm going to scroll all the way back up to the first item again and think about what's going to be included there. So I'm going to ungreen. I'll ungreen these ones. And the cash to suppliers, we're going to have accounts payable is going to be involved. Let's make it orange. And then we've got all the suppliers, which are going to be, I'm going to include the telephone, the printing, the utilities, and that's basically it, right? And then the supplies. So we'll include those ones. So again, we want to net these out. So we're going to say these would be on an accrual basis, but we have this payable, so we're going to net these out. And we don't have to deal with the beginning payable here because we don't have any beginning balances. So it's not a change. We're not looking at the difference. We are considering the change, but the beginning balance is 0. So it's a little bit easier to think about. Okay, so let's go back down. We're going to pick up those numbers. So I'm going to say this is equal to, in U70, I'm going to scroll back up, and we're going to pick up what's in the accounts payable, plus, and I'm going to sum the sum of these three numbers: telephone, the printing, the utilities, the supplies. Close the brackets and enter. So there we have that. But again, this should be negative, so because it's a cash paid item. This is cash going out. So I'm going to say negative, and then I'll bracket the entire thing. So bracket the whole thing, and so there we have that. That's going to give us the net cash provided by operating activities. We will put in V71 equals the sum of those three numbers. So there's the 110, 540. Next, we're going to have cash flows from investing activities. Now, you'll recall that one of the major things in investing activities is the purchase and sale of property, plant, and equipment. So here we have the purchase of property, plant, and equipment. So if we go and think about that, we could scroll up top and we could say, what's in property, plant, and equipment up top? If I select this item and say what's in there, we can go back and say this transaction is recorded in there. Of this transaction, 13,000 of it is cash related. The other is non-cash related. So 13,000 cash related. So I'm going to scroll back down, pick up that 13, and we could pick it up just from that. So I'll say negative of, where's my arrow? Where'd the arrow go? There it is. That 13. Or you could just type it in if you want 13, but there's the 13. Actually, it should be a negative. It's an outflow. We paid cash, so I'm going to get rid of the negative, and we'll make it a negative. So that'll be bracketed there. So a cash decrease. Now, we don't have any financing, so we don't need it there. We don't need to add the financing. I'm just going to say, all right, that's going to give us the net increase in cash, which will be the sum of the outer column. There's the 97,540, and then the beginning cash, which of course is 0, because this is the first year of operations. So I'll scroll back up, and the beginning balance in cash, I could say is that 0. I want to make sure to pick up the proper 0. There's the 0. And then we have the ending balance in cash. So the ending balance in cash, if we sum up the change and the ending balance, there's the 97,540. That of course should tie out to what's on the trial balance and what's on the statement of position 97,540. Okay, so the next thing we're going to do is do, that was the direct method. Now, if we use the direct method, oftentimes it's nice to have the reconciliation, because what we would also like to see is the reconciliation from kind of the net income type number, which is the increase in net assets that is on the statement of activities. We want to reconcile that to cash provided by operating activities, which we've already determined here is this 110, but we'd like to see that kind of reconciliation process. So we're going to get back to this 110 instead of going from top to bottom, recreating the basically income statement, statement of activities from top to bottom. We're just going to start at the bottom, go from the bottom to the top. So the bottom line number is going to be net income, or change in net assets, which we can get from this statement similar to the income statement, statement of activities. Here's the statement of activities. Bottom line number is this number, the 278,900. That's the increase. This number is the same, but that's really tying it to equity. The only reason it's the same is because there's nothing in the beginning equity at the beginning, net assets, which is similar to equity for the nonprofit organization. Okay, so then we're going to basically take depreciation. And you'll recall you can think of these as changes in the balance sheet type of accounts. So what I would think about as depreciation is the change in the balance sheet account. So instead of taking it from down here, the depreciation that we record, I'm going to go all the way up to the top to this one in cell R24. I would think of it as the difference between the accumulated depreciation beginning and ending balance, because you really want to think of it as the change in all of these accounts. Again, I won't go into a lot of detail on the best practices for statement of cash flows. You want to get a lot more detail. We have a course on that. So here I would say that this is going to be equal to the change in, I'm going to scroll all the way to the top and pick these numbers up here. So that's going to be the 4,400. It needs to be a positive number, so I'm going to double click on it, make it a negative. Why is it a positive? Because obviously it depreciation decreased what would be similar to net income, change in net assets. We need to add it back because it's not cash related. And then we're going to have an increase in net contributions revenue. So the increase is going to be equal to, if I scroll all the way up top, we're looking at the net contributions. Here's contributions revenue. Now we want this net, which means we're going to be picking up this plus this plus this, because these are all part of the contributions revenue item. And we don't have to subtract it out because there was no beginning balance first year of operation. So the change, whatever the balance is the change. So we're going to say that is going to be the 182,560. Now, it was an increase, so assets, when they increase, need to be negative balances here. So I need to make this a negative. So I'm going to double click on this. Negative sign in front of it, brackets around the whole thing. And so that's what we want. Then there was an increase in accounts payable. So accounts payable, so we're going to do the same thing. This equals, I'm going to scroll all the way up to the top. And we're looking for that change in accounts payable. It started at 0, of course, and then it went up to 4,500. Now this one, if there was an increase in a liability, then it needs to be a positive number on our statement of cash flow indirect method. So I'm going to change the sign by making a negative in front of it, flipping it to a positive number. Next, we're going to have increase in salaries payable. So salaries payable, I'm going to say equals. I'm going to scroll all the way up looking for salaries payable. And that's going to be the 16.8. It was 0. It went up by 16.8 to 16.8. Again, if there's an increase in a liability, it needs to be a positive number. That's kind of like the general rule that you could follow on the indirect method. And then we have the gifts of furniture. So gift of furniture. And you'll recall that there was furniture that was gifted. So I'm going to say this is going to be equal to, and I'm going to scroll all the way over and pick up that gifted furniture, which was right here, the donated furniture of 11.5. and I'm going to say enter. That needs to decrease because, so I'm going to double click on it, put a negative in front of it. Why? Because it was included as kind of like revenue, similar to revenue, increasing similar to net income, changes in net assets, and it wasn't cash related. Therefore, we have to back it out or subtract it. And that's going to give us the cash provided by operating activities, where we will sum this up equals the sum of the outer column. And there's our 110,540. So the 110,540 here for the cash provided by operating activities, tying out to the 110,540 up top for the cash provided by operating activities in the direct method. And then, of course, the bottom line of the cash flows is the ending cash. It then ties out to what would be similar to the balance sheet, the statement of financial position for cash.